Welcome to Thoughts on the Market. I'm Andrew Sheets, Chief Cross-Asset Strategist for Morgan Stanley. Along with my colleagues bringing you a variety of perspectives, I'll be talking about trends across the global investment landscape and how we put those ideas together. It's Friday, January 27th at 2 p.m. in London. Investing is about choices. In any market at any moment, an investor always has the option to hold a financial asset like stocks or bonds, or hold cash. For much of the last decade, cash yielded next to nothing, or less than nothing if you were in the Eurozone. But cash rates have now risen substantially. 12-month Treasury bills now yield about 2.5% more than the S&P 500. When an asset yields less than what investors earn in cash, we say that it has negative carry. For the S&P 500, that carry is now the worst since August of 2007. But this isn't only an equity story. A U.S. 30-year Treasury bond yields about 3.7%, much less than that 12-month Treasury bill at about 4.5%. Buying either U.S. stocks or bonds at current levels is asking investors to accept a historically low yield relative to short-term cash. Just how low? For a 60-40 portfolio of the S&P 500 and 30-year Treasury bonds, the yield relative to those T-bills is the lowest since January of 2001. To state the obvious, low yields relative to what you can earn in cash isn't great for the story for either stocks or bonds. But we think bonds at least get an additional price boost if growth and inflation slow in line with our forecasts. It also suggests one may need to be more careful about picking one's spots within Treasury maturities. For example, we think 7-year Treasuries look more appealing than the 30-year version. For stocks, we think carry is one of several factors that will support the outperformance of international over U.S. equities. Many non-U.S. stock markets still offer dividend yields much higher than the local cash rate, including indices in Europe, Japan, Taiwan, Hong Kong, and Australia. This sort of positive carry has historically been a supportive factor for equity performance, and we think that applies again today. Investing is always about choices. For investors, rising yields on cash are raising the bar for what stocks and bonds need to deliver. Thanks for listening. Subscribe to Thoughts on the Market on Apple Podcasts or wherever you listen, and leave us a review. We'd love to hear from you.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.